Urs, excited to be talking to you today. We're going to be talking about kind of our investment approach and what it is to invest as a U.S. investor and what we do for a U.S. investor. Maybe you could start off by giving kind of that explanation of why it is that we exclude the U.S. dollar for U.S. investors and the U.S. market.
Yes, certainly. So we as WHVP, we are registered with the SEC, but we are located outside of the US. So our headquarters or our offices are in Switzerland. And so we have kind of an other perspective than your domestic asset manager in the US probably has. And so for us, it is really to give you access to other markets, to other opportunities and other currencies combined with this different perspective, which you otherwise wouldn't get.
Yeah, and I think that's a really important point to bring in is you have the mindset in the US of American exceptionalism, especially when it comes to investing. And I'm not here to say that the US markets have not done exceptionally well in the past 2 decades.
Yeah.
At the same time, there is when you start thinking about the time horizon and you think about broader facts of what's happening to the US dollar, what's happening in the US political situation, that's kind of where we step in and say, okay, we've been thinking about this for over 30 years. And here is the long term that we see in positioning that can help. And, it is not, I think often people really look at, what we do and they say, okay, it's possibly outside of like my grasp of understanding. But could you explain kind of what a general portfolio would hold? Obviously not the positions, they're going to be tailor-made to each client and their strategy, but the types of investments are not really so difficult to understand.
Yeah. I mean, as you mentioned, we are excluding the US dollar. We're excluding the US market. So we are not here to compete or do the same as your domestic asset manager does. So what we do is we look out to different economic areas, different countries where we have different currencies involved, and then we allocate to these different currencies. And once we are in the currencies, we look out for investment opportunities that are long-term oriented, that follow a proven business model where we see, okay, that's something that will give you benefit and access to a industry that makes sense in the long term. And as you mentioned before, at the end of the day, it always comes down to the time horizon. I mean, obviously, you can be a day trader and you can make good money if you can, but that's not what we are. We are here to structure at least part of your portfolio in a generational way, where we want to be invested in the long term in companies that make money. So we are also not looking for companies that lose money year over year just because they have high potential in about 10 years. So boots on the ground. What's the situation today? What's the perspective for this industry? And then we're moving in.
Yeah, no, that's really good. And that's where the construction is going to look more of like your bonds, your precious metals, and stocks.
Correct.
And so that's kind of where, a lot of people feel like it's too big of a thought process to understand. And there are the currency factors. So the thing that is usually what I've realized in working here is the most difficult piece to understand is the currency against the US dollar.
Yeah.
And that's where, portfolios that we work with, they're referenced in US dollar. Now, that doesn't mean that we're holding US dollar or US titles. It just gives you the end value of the various investments that we're holding in US dollars, despite being totally held outside of it.
Yes, that's correct. And I think that's important for the clients to get this kind of understanding, to also have the ability to a certain extent to compare their offshore portfolio with the domestic portfolio to see, okay, what's the difference, where we see movements that affect our wealth. in a positive or negative way.
Yeah, absolutely. And maybe you could just touch slightly on, what is the reason that a US person, like what are the kind of I'd say three main factors of why a person should consider that long-term international diversification?
As I said before, I think it's the generational wealth aspect, like the mindset of, okay, I'm not just investing for the next 2 years and then I have my money double, but it's about bringing in stability into your generational wealth. The second part is accessing another mindset, another perspective. I think that's very important. The way we think, the way our minds work, what we read, what we see in the world is different than what somebody would read and think maybe in Los Angeles. And the third point is really the devaluation of the US dollar, the loss of purchasing power, which is um, something most of our clients worry about. That they see, okay, we get good returns, we have a good life in the US, but we also see how our purchasing power, our US dollar becomes less and less valuable.
Perfect. Thank you, Urs.